President Obama is set to announce Janet Yellen as a nominee for his next Fed chairperson. She would be the first chairwoman in the history of the Federal Reserve. Here to talk about that and how it might affect gold is Mike McGlone of ETF Securities. Mike, great to have you back.
Good to be back, Joe.
So let's jump right to it. Janet Yellen, the next Fed chairperson. What might that mean for gold?
Probably nothing different. And the uncertainty's gone. We all kind of expected it to be her. She's been appointed. Now let's move on. I think one of the reasons gold's lower than more recently is gold didn't perform too well yesterday, and it's being knocked around really by speculators.
So we're looking at the debt ceiling as a big issue, and of course the government shutdown continues. Does as we get closer to the debt ceiling actually bring the price of gold down out of fear that all assets will be hit by something like that?
Well, as we get closer to the debt ceiling, we all know that should be good for gold. And I think a lot of speculators bought on that perception and maybe are just not getting the appreciation they want. But if you look at the price of gold overlaid with the debt to GDP in this country since 1995, the last time we had a shutdown, it's been a pretty high correlation, except recently it's been more of a disconnect. And gold generally should trade better when we have issues with sovereign debt situations, which we're having now.
Gold, we've seen it sell off $20 and then buy back $20. It's kind of a back and forth. Why are we seeing that right now, this real range trade for gold?
Well, as we like to say in a trading desk, if it were easy, we wouldn't be here. And I think gold is probing out a bottom. I think if it might try to get low, to trade lower to see if there's that physical solid demand down there. We're still seeing liquidation in ETFs in this country, so investors are still getting out. But there's still times to buy gold or reallocate in assets and times to sell gold or reallocate in assets. And a good example is the last election. At that time, gold was around $1,700 an ounce, and the price of the S&P 500 dipped to $1,300. And that was a good chance to reallocate into equities and maybe out of gold. Right. Now it's almost, we've traded places. Gold is around $1,300, and the S&P 500 has just made a new high around $1,700. And gold, by our estimates, is nearing its all-in cost of production, which is around $1,200. So from prudent investor standpoint, we think looking forward, you're supposed to be reallocating into gold.
All right, Mike. Well, we'll leave it there. Thanks so much.
Thank you.
You heard it from Mike. Janet Yellen, pretty much what most gold speculators were expecting, and we are going to continue to keep an eye on the debt ceiling and the government shutdown. For The Street, I'm Joe Deaux.